Hola guys, and que paso? What's going on? This is Hala Pablo. Let's look at where we are in Bitcoin real briefly. Okay, I'll tell you what I'm seeing here. Not much has changed. I know people are getting excited about the recent breach of 17,000. But I want to propose to you, I believe that if you are tempted to buy in right now, you could very well be buying into a bull trap or a UTAD, otherwise known as in Wyckoff terms, which is a upthrust after distribution. Why do I think Bitcoin is going to distribute? I believe distribution is inevitable for Bitcoin simply because of the volume spread analysis reads in this present trading range. I have this on the 4-hour. I want you to look at, and I always harp on this, the pullbacks. So we've come out of a long selling climax. This is the selling climax here, of course. Then we shot back up for the automatic rally here. And then we came back down. And this area here where it's holding, where this floor has been established, is actually the secondary test zone, which is abbreviated as ST in the Wyckoff sense. So we've held that floor. We have a bounce here, 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 and now we're up to the trading range resistance, hugging it presently in this ascending channel. But what I want to direct your attention to is the pullbacks in this trading range. We have this pullback here. I'll call this number 1. This pullback here, number 2, where it came down to replenish this liquidity void here, which was caused by the selling climax back on the 22nd of the 10th of November, and then it mitigated or replenished it or reconciled it on the 21st of November. And that simply means that the price action went down and revisited the previous lows of what was it, 15 something, 15.5, I guess it was. And so we've already replenished this liquidity void, and then we've come back up. So this liquidity void has been met here. We could have a triple replenishment of this liquidity void, or we could go up and reconcile these upper liquidity voids up here where the automatic rally point was around 18,000. That's entirely possible. But if we do come up this high, we would have to breach the trend resistance on this regression trend here. We'd have to breach this, and we should see some volume confirming it if it's real. If it's not, then the volume is going to be low, which I suspect it's going to be low if we do breach it. And we would come up here for the purpose of replenishing this liquidity void up here on the macro. And then as soon as we do that, the market makers will sell into this FOMO pump. By then, people will be FOMOing into it, retail traders, as they usually do. And the market makers, or the whales, will sell into it, causing the price to drop eventually. Why? Because only weak hands will be holding it up at that point. All the strong hands will have exited the game. Weak hands are not able to sustain Bitcoin or any altcoin at that, and hence the price will fall. It'll fall back into the regression trend, and this will be a genuine UTAD, upthrust after distribution, aka bull trap, and then the price will fall. Now, what gives me the distributional bias in this range is simply, let's go back to these pullbacks here that I enumerated. 1, 2, and then to a lesser extent 3 here as it hugged the trading range support before it came back up right through the 0.5 Fibonacci up to trading range resistance where we currently are. If you notice on these pullbacks, I want you to look into the vertical bar volume. Always look at the vertical bar volume. when the price action is at one of three junctures, either trading range resistance, trading range midpoint, or trading range support. In this case, we are at trading range support, or the secondary test here. And we look into the selling volume, or we look into the bear volume, which is red, obviously, and we see a expansion. We see growing bars on the pullbacks. So this creates a divergence, and when we have ascending bars in the vertical bar, along with on top we have the price action going down, we have a divergence, and that confirms strength in the supply, the selling power. The bears are in control, obviously. And then here we see the same thing. We see in this area here, this pullback, we're seeing supply building. See how low the volume is here when the price action was at trading range midpoint? And as it fell towards support, broke support and came down to this kind of like this low where it mitigated this lower liquidity void, we're having expansion in supply volume again, like we had on this first wave. So this further reinforces the bias of a distribution. And then it comes back up as quickly as it went down. It came back up. It came back up to trading range midpoint. This is the 0.5 Fibonacci level here. And as it did that, we had pretty low volume in the demand, which is the buy power, the buying power. So low volume, relatively low. I would say that's moderate volume. It certainly it doesn't predominate the preceding supply volume. It's about the same, but it was not enough to rally above the trading range midpoint. Came back down. Here we have like a lateral consolidation. Came back down and hugged trading range support for a little bit, and then came back up to trading range resistance. And here, although this is what we've just seen this like last weekend. We have some rather large demand bars, but not very overwhelmingly optimistic as far as I don't see a lot of change of behavior volume bars, like critical demand bars, that any indication that the distribution in the bear cycle of Bitcoin is over. Quite the contrary, we see supply again reemerging here as it hugs support, or rather, this is resistance, trading range resistance. So it remains to be seen if we're going to make a break for the trading. Well, this would be the resistance of the channel. I think it's possible, but like I said, it could be a trap if it is. I think inevitably we're going back down, and how far down we could determine this from the Fibonacci numbers. I think inevitably we're going to be seeing, I'm just going to go off this distributional bias here and this spring action fib retracement level based off this, and then we'll go off the automatic rally point. So spring is the low, the AR automatic rally is the high, and that would bring the 1.618 fib, which I call the golden fib retracement, down to 13.8. So we could see $13,800 Bitcoin relatively soon. I say relatively soon, within a week or so, and that would bring it down pretty low. I mean, not as low as it could go. I think ultimately we could see $10,000 Bitcoin. Why do I say 10,000? Well, if we zoom out, the $10,000 line is around here, and this was the floor for the previous cycle. So it would, if it were to come down to 10,000, it would reconcile this macro liquidity void at $10,000, and then that, I think, would pretty much be the bottom. Hopefully, I can't imagine Bitcoin dropping below 10,000, but shit, man, anything's possible in this crazy markets, crazy cycle right now. A lot of FOMO, a lot of FUD, rather FUD really right now. So, and the recession is just deplorable in this country, and I guess globally as well. So I don't know. It's not looking good. But for buying, hodling, accumulation opportunities, this is ideal. This is where future wealth is created in markets like this. So I don't want you to get discouraged. I don't want, you find good in every bad situation. This is bad for people who bought Bitcoin at $60,000 thinking it was going to moon to 100 grand this year. Those people got, skinned alive. Those traders who bought Bitcoin at 60,000, 50,000, 40, 30,000, and or DCA'd back during the summer, starting at the $30,000 level, started DCAing. They're not, they're heavily underwater. But the good thing is you can continue to DCA as you can into coins that you have faith in, like, for example, Ethereum, Bitcoin. A lot of people have have an optimistic outlook on Shiba Inu, on Loon C, on Cardano, on Dogecoin and XRP, XLM. By all means, I don't think those coins are going away. Those tokens are going away. So if you have faith in a project, this is a great time to accumulate. Just make sure that you believe in the coin and you don't go all in. And you should be all right. But otherwise, just keep our eyes on the volume spread analysis, and I'll be keeping you updated as I see things emerge and in these markets. So stay tuned. If you got anything out of this, give me a like or subscribe, whatever you need to do, and I'll keep them coming. All right, guys, I got to go. I'll talk to you later. All right, man. Bye-bye. Adios.